good morning, everybody. Good afternoon, and thank you for joining us for our Power Play Tuesday for Quest Trust. Today, we have a real treat for you. We are having a West Point graduate teach us about the flexibility in investing in repurposed office buildings. You know, it's one of those things where a lot of people are now working from home, and we have to find ways of learning how to make money off that. So Michael Euperio is the Chief Operating Officer of Redeem Investments and oversees all the aspects of the day-to-day acquisitions. He has been doing multifamily assets since 2018. And like we said, a graduate from the United States Military Academy with an MBA from Colorado University. Michael serves on the board of the West Point Society of Denver and is an active venture capital and private equity community. Michael, we are so happy to have you. Welcome.
Hey, Evelyn. Thanks for having me. It's an absolute pleasure to be here today. And I look forward to sharing some knowledge and education with your audience.
Awesome. So I do have a few slides, but we'll go over those at the end of the presentation. The only thing that I will pop on right now is our disclaimer. So at Quest Trust, we do not provide tax, legal, or investment advice. All the material that we have today is for education purposes only. And Michael, take it away.
All right. Thanks, Evelyn. Can you guys see my screen? Everybody seeing my screen okay? Looks like there it is. All right, perfect. So first off, let me say Happy New Year to everybody. I believe I am the esteemed first guest for the year as far as January is concerned, the January theme of 2024, new year, new money, new investments. So today I'm going to talk a little bit about a unique take on an asset class that is certainly not in vogue right now, and that's the office asset class, right? And so interestingly enough, I think there was just a piece earlier this weekend on 60 Minutes about how there's just a ton of empty office space out there right now. New York has like the equivalent of 3 Empire State Buildings that are sitting vacant. So 95 million in square feet of empty office space in just the New York metro area alone. And so, yeah, you're probably wondering why we're investing in office, but it's really a confluence of factors around not investing in traditional office, but office and using that space for its highest and best use, right? And so title of today's presentation is Flexibility is Key, Investing in Repurposed Office Buildings to Meet Evolving Workplace Needs. And it's not just workplace needs, it's about community needs as well, right? And so I'll talk a little bit about that when I get into the presentation. But what I'll cover today, I want to keep it to about 30 minutes of prepared remarks and then certainly leave time for Q&A. But I'll talk about some high-level economic and macro trends that we're seeing within commercial real estate, talk specifically about the office asset class and some trends that we're seeing there, and how we can perhaps capitalize on some of those trends and opportunities that are created by all this vacant office space that's out there. And then specifically go into 3 case studies as far as how we've done adaptive reuse around using vacant office space for higher and better use. So with that, let me jump in. So commercial real estate is facing multiple headwinds right now. I mean, this is not a new news story, right? I mean, obviously there's high interest rates right now. I mean, the Fed increased interest rates at the highest clip in rate over the last 18 to 24 months, right? And so with these high interest rates, you don't enjoy the same kind of cash flow as we previously had. So cash on cash yields, NOI has been down. In conjunction with that, we've seen cap rate expansion, right? So the record low cap rates that we've seen, for the last five to 8 years, there's been some expansion there, and so what that's resulted in is value reduction. And so we've seen values tick down, certainly over the last 12 to 24 months. within office specifically, as high as 50% discounts on normal office valuations. It's just absolutely crazy what we're seeing out there. With high interest rates, it's also difficult for current owners to refinance. Buyers, have higher costs of capital, and so we're also seeing reduced transaction volume, right? And if I remember right, normally Q4 can tend to be a strong transaction volume quarter, and Q4 this past year, has been some of the lowest transaction volume that we've seen in a really long time. Now, couple this value reduction, the reduced transaction volume, with the fact that obviously inflation has been at record highs, for the last year and a half. There have been significant OpEx increases, right? Like we've seen property taxes increase significantly, insurance. We've seen insurance premiums in just 1 year go up anywhere from 20 to 40%. Energy utility bills have gone up. As these construction projects are out there, labor supplies have gone up as well, right? So absolutely, I'm probably not getting you super excited about real estate, but there's certainly opportunities that are being created by some of these headwinds, right? And I'll talk about a little bit about that, here with some of these demographic changes that we might be able to take advantage of. First is the shift to remote hybrid work, after the pandemic, right? Like the COVID showed that we can work from home and be productive still, right? And so I was just looking at a statistic earlier today about how most companies plan to reduce their office footprint in 2024. You have relocation to outer suburbs, right? And so this whole remote hybrid work concept of just coming into the office, anywhere from 1 to 3 times a week, and then working remotely or from home, the other times. That is a trend that is going to be here to stay. I mean, we talk about the new norm and the new normal, as far as the changing work environment. This is not going to change anytime soon, as far as office space, having the traditional 9 to 5 and coming into the workspace 5 days a week. We'll talk about this, but 88% of companies are moving more towards a remote hybrid work environment. And employees are seeking that, as far as retention and the benefit that they want to work at a company. In order to work at a company, they want to make sure that remote hybrid work environment is in place. It's also introduced public-private partnerships, with underserved municipalities. So if there's overnight stay capability that's needed, new development that's happening downtown, revitalizations of economic development areas downtown, that's brought forth, a whole bunch of public-private partnerships opportunities that have resurfaced here, and I'll talk about that in one of our case studies a little bit later. But that's a uncovered opportunity, from this new work environment. The silver tsunami. Over half of the U.S. population is actually over 65 years old, right? They're living longer, need care longer, and so we talk about. I bring this up because medical office buildings are a subset of office that is tended to be viewed a little bit more recession resilient, and so this demographic, obviously introduces the fact that healthcare is going to be a continued trend that we're going to have to address, and care is going to be needed for longer, right? So when you think about the direct parallel to customer lifetime value, this silver tsunami of the older population, they're going to need healthcare for longer. And going back to COVID and travel spend post COVID, it's interesting, but being pent up for all that time during COVID has actually increased the amount of travel spend that's happened over the last couple of years, right? I'm a perfect example of this. For the first time in my working career, I took a 3-week vacation over the holidays to the Philippines. And, I mean, the bill itself was a lot more than probably what I wanted to spend. But at the end of the day, being pent up around COVID and not being able to go travel internationally for a while, gave me that flexibility to be able to spend a little bit more on travel for a big trip around the holidays recently. And so I talked a little bit about the high level macro trends that we're seeing right now. Just a little bit more about me. I appreciate the introduction, talking about me being the COO of Redeem Investments. I wanted you all to get to know me a little bit more, so you kind of understood my background and how I ended up in real estate and wealth care, what we like to call wealth care. I started out in the military. Being a West Point graduate, we all ended up having to go into active service. So I was active duty for 5.5 years. Spent a little bit of time as a tank platoon leader, an armored cavalry officer, deployed to Iraq a couple different times. And this is really a formative time in my career in the sense that, it really gave me some core values around wanting to, really concentrate on service and giving, right? And what kind of impact you can make around service and giving. And so I left active duty military, stayed on as a reservist. Will be retiring here this summer, after a 21-year career in the military. And, everything that I do from this point forward really needs to be centered around service, right? And so, it's great to be partnering with Quest around helping, its audience, its customers, its members to be able to maximize, retirement, enjoyment that they're getting from financial decisions they're making around retirement. When I left the military, I transitioned into high growth tech in the startup world for a little over 10 years. My first foray into real estate was actually around a tech startup called Pivot Desk. And it's kind of funny. It actually soured me on commercial real estate for the longest time, in the sense that, Pivot Desk was meant to provide flexible office alternatives, for early stage companies, right? And so it was meant to be the Airbnb for office space. It was privately backed by some large venture capital firms. Was backed by one of the largest accelerators in the U.S. And so it seemed like it was on a trajectory for success, but unfortunately, it never found product market fit, in the sense that sharing office space was different in the sense that it could change a company's culture, like sharing internet infrastructure, sharing a refrigerator, sharing common areas and office space. Just didn't have the same appeal as being a host and a guest on Airbnb, right? So a little bit different dynamic. Never found product market fit. Ended up divesting and selling to a company called Industrious, who competed directly with WeWork. But either way, I mean, it soured me a little bit on real estate, in the sense that just working within real estate and the people around it, it didn't seem like there was going to be success around office, even back in 2014, 2015 when I was at the company. Fast forward to now, I ended up doing my first few deals in real estate. Is frankly my third career at this point. Started doing multifamily deals here in Colorado on the side while I was in tech, and had pretty great success doing some multifamily deals here in Colorado, value add multifamily, pretty simple concept of just doing basically a higher level flip, and buying a property and selling it at a higher valuation later on down the line. Had that happen 3 different occasions, all within a 2 to 3 year time frame where effectively almost doubled my money, within 18 to 36 month time frame, three different occasions. And so that led me to wanting to pursue real estate full time, and that's what led me to partnering with my partner Christian Catrone, who's also a West Point graduate, for Redeem Investments. So Redeem Investments is a faith-driven company that focuses entirely on ESG commercial real estate, right? And so, yes, we had our start in multifamily. We opportunistically kind of shifted to adaptive reuse, hospitality, medical office buildings, because of just how the company's trajectory was going. And I'll talk through that through one of our case studies. But we want to make sure we have a positive impact on the lives of people, communities, and buildings that we transform, right? So we have our core values are really centered around integrity, servant leadership, and being relationship focused. As far as our acquisitions are concerned, really focused on adaptive reuse, value add, and then a renewable energy component to everything that we do as well, right? And so, we want to make sure that we're doing well and doing good, but also providing a high return to our investors. And so talked a little bit about myself. I'll mention my partner. We're both of Filipino heritage. He was a first generation American who immigrated at 7 years old from the Philippines. He spent 20 years in corporate America as a healthcare executive, transitioned into what he coined wealth care. Proud husband, 21 years, father of 2 teenage boys, an MBA from UT. I already talked about myself, for a little bit. The big thing about me is, and I want to reiterate, is, I myself, use my own solo 401k, self-directed IRAs to invest. And I've been doing that, for many, many years now. And I've had some success doing that within real estate, and now plan on doing it quite a bit, in this opportunity that I'm going to be talking about around, adaptive reuse in office space. Right. So talked a little bit about this a little bit earlier. As far as if you look at our population now, in the United States, it's comprised of, many people that are above the age of 60 years old, right? Like you can see that the boomer population, they're coming into age at this point where they're going to need a lot of healthcare, and spending a lot more on healthcare, silent births, 47 million, right? So we can talk about that here in the sense that medical spending increases rapidly with age, right? Like you can see that, from 65 and up, you're spending anywhere from, on a per capita basis, to $16,000 to well above $30,000, if you're 85 years and older. Right. And so obviously talking about this in the sense that there's going to be a lot more money spent on healthcare over the next few years. Talked about this a little bit. Spending on trips is up. You can see average trip cost pre-pandemic to some of these various different locales and destinations. Everything is up at this point, pretty much across the board. I guess Germany is a little bit lower, but the United States trip costs are going up. South Africa, significantly higher. Greece, Europe destinations, spending on trips is going up, right? And so you wonder why I'm bringing up all the demographic trends here. It's because we talked about this a little bit earlier, but traditional office is dead as we know it, right? Like companies learn that employees can be productive working remotely. Across the board, this is a trend that's going to continue. I have a friend who's a managing director for a large commercial brokerage, a global brokerage, and he's talking about how we may not see occupancy in office get back to pre-pandemic levels until potentially 2040. And so companies are continuing to reduce their leasing footprint. We've talked about recruitment and retention. People want to have a flexible work environment. So what does this mean for office valuations, right? I mean, valuations are plummeting because of two different things. 50% discounts are normal in today's office market. I mean, it doesn't necessarily make sense to sign a 10 to 15 year lease, or even longer than that, committing to all this space, because people want to work from home, want to work remotely, want to work flexibly. They don't need the long-term space. A lot of it just sits empty, right? And so you're basically seeing net operating income reduction. You're seeing cap rate expansion, and that's the reason why you're seeing plummeting valuations, right? We're talking about buildings that were, crown jewels of certain markets, major metro markets that were, replacement costs, anywhere from $300 to $400 a foot, trading for $80 a foot here more recently, right? I know a building in Philadelphia that did that exact situation where it sold at a pretty significant discount, right? So just continue on with macro office trends. During the first 3 months of 2023, U.S. office vacancy topped 20% for the first time in decades. Specifically in San Francisco, Dallas, and Houston, vacancy rates are as high as 25%. The market value of office buildings in the city fell $28.6 billion last year, the first such decline since at least 2000, according to the New York Times. NPR talking about a lot of offices are still sitting empty, and it's becoming a major risk for the economy. Nearly 20% of office spaces are currently empty across the United States, a milestone that exceeds the vacancy rate during the 2008 global financial crisis. And really the perfect storm, empty office buildings across the United States could lead to a financial meltdown, right? And so this brings me to our investment thesis for Redeem Investments and how we've kind of evolved into adaptive reuse in our blue ocean strategy. And what adaptive reuse is, you've heard me talk about it a couple different times, but it really is just taking existing office space and using it for a higher and better use, right? And so, that could be a surgery center, that could be dental offices, dialysis centers, residential treatment centers, primary care centers, data centers, self-storage facilities, multifamily hospitality. I'll talk about an example of hybrid office, with a global partner that we've recently developed. But this is no different than some other case studies previously where, the original intent of a product or service turns out to be used in a different manner, right? So Coke was one of those examples. Listerine is an example of, having an original use, but then being used for something better. Slinky, and then Play-Doh, right? So seems like a pretty simple concept, but there's more to it than that. So for example, talking a little bit about, our global partner for hybrid flex office, right? And so this is a company that's capitalized on this recent trend. I think people have probably heard of Regis Executive Suites. They've grown tremendously over the last couple of years. And in fact, 2022 was their best year ever. 2023, 2024, they're planning on expanding globally. I think, well over 1,000 executive suite centers across the world. And Fortune 500 companies, Inc. 5,000 companies are coming to Regis for flex office space in droves, right? Like, hey, why do I need to sign a 10 to 15 year lease for office space if I can go to a Regis and have a flexible agreement with them, to scale space as needed, before maybe perhaps having permanent space in a locale. But they have tons and tons of partnerships with Fortune 500 companies. I think they call over 85% of the Fortune 500 as customers and have a partnership with those. right? And so these are a list of some of their customers, right? And so we are partnering with Regis to, effectively, take over space, in some of our buildings that we're acquiring, and in placing this model that they're talking about doing as far as hybrid and flex office, right? And so, we do have a seed deal, that we are putting together with Regis. I'll talk about that in San Antonio here in a little bit. And our plan is to grow together with one another. And so you could use this QR code. You could use it, to learn a little bit more. It's about a white paper that they have about their growth. Here's an example of an executive suite center that they've opened up, in submarket of Austin. This one opened up in 2015. It's just over 20,000 square feet in size. Interesting enough, at 74% occupancy, that's stabilized occupancy for an executive suite center. But this is producing 30 to 40% above market rate rents per foot, right? And so a Regis center can actually get to break even. We have a pro forma with them to get to break even in San Antonio for, I think at 23%, an executive center is break even. And so at 74%, obviously they're producing way above normal headline rents for a market. You can see the average desk price here, but the takeaway from this is they are doing really, really, really well, and continue to do well as they're capitalizing on this trend around flexible and hybrid office space. And so why now? We talked about the state of traditional office, reduced utilization. Most companies are switching to a flexible work model. The fact that most Americans prefer a hybrid model. 58% of Americans already work in a hybrid work environment. These low valuations creates buying opportunities, right? High vacancy, interest rates. You're getting buildings at 50% plus discounts. We're in the process of acquiring a office building portfolio in San Antonio, and I'll talk about it here in one of my case studies here in a second, for $70 a foot. And frankly, I talked about the Philadelphia deal that I mentioned a little bit earlier, but building that exact same building, in San Antonio in that same geography in that submarket would cost $250 plus a foot. And so you're seeing these impressive low valuations. What that means for us is, we can take these traditional offices, and through adaptive reuse can capitalize on putting medical office buildings in place, right? And so we have a partnership, with some large physician groups within Texas, that are looking for medical office buildings, willing to sign long-term leases, personal guarantees behind those long-term leases, putting essential in-person services in place, right? Like you're not going to do surgery remotely, right? Like that's not something that you can do over Zoom or over video. You need physical space in order to do surgery, right? And so these medical office buildings are something that we're looking at transforming some of our acquisitions into, right? And so I want to spend a little bit of time talking about a few different case studies that we have going on. This first one isn't really an office building, but it is our first full cycle adaptive reuse project. And it was something that I don't say we stumbled upon, but we definitely knew that the building in its current form wasn't being used for its highest and best use, right? And so this 44 unit apartment complex was right across the street from Cowboy Stadium in Arlington, Texas. It was surrounded by parking lots, and other new developments. It didn't really make a ton of sense for just pure residential. And so we converted it to a boutique short-term rental hotel, right? And so, what we were able to do was put, a whole bunch of Airbnbs in partnership with Airbnb operators who wanted to do arbitrage, and put turnkey units in 2-bedroom units in this apartment complex, right? And so, we only had to put about $1 million in capital improvements into the property. But you can see that we increased NOI significantly because we were able to take rents and charges per month and increase them pretty dramatically. We ended up purchasing this building for $3.8 million, sold it just about 3 years later, for $7.2 million. It's not on the slide itself, but that ended up being about a 22% average annual return for our investors in this deal. But once again, this is what got us into adaptive reuse, and it was really because it's what was needed by the building in order to satisfy and make its best use of the space, right? So it was an office space. This one itself, this is a hybrid office that we're working on in Northwest San Antonio in the medical district. We're looking at buying, a 6-story office building just shy of 90,000 square feet, 1985 Class B asset. It was owned formerly by Humana Healthcare, or currently owned by Humana Healthcare, used as a call center. And that call center has been sitting empty for, going back to 2020, right? And so these buildings have been sitting empty since middle of 2020, hasn't been being used. Humana wanted to monetize that. And so they're actually doing a sale lease back to us. They're selling it to us for, just shy of right around $6 million. What we're going to do with this space is Humana is continuing to occupy 2 of the 6 floors. But then this is where our partnership with Regis is coming to fruition, in the sense that they sought out this site, for one of their turnkey spots for expansion in San Antonio. They're going to start pre-leasing the executive center. But as I said, at 23% occupancy, it would be at break even. At stabilized 70% plus occupancy, it should be, 35-40% above market rate rents per square foot in the area, right? And so one other potential area for upside is, one of our Surgeons Group partnerships is evaluating one of the floors of the building for ambulatory surgical center, right? And so, perhaps might be able to sign, a 12 to 15 year lease there as well for that one floor for that ambulatory surgical center. And talked a little bit about hospitality. This is a great deal that we're really excited about. It materialized because of that adaptive reuse project that we did in Arlington, Texas. One of our contacts, in Temple, Texas, is the president CEO of the Economic Development Corporation there. There was a 10-story office building in downtown Temple that was being occupied by a local regional bank. They were using it for their downtown branch, Extraco Banks. You might have heard of them. It was a multi-tenant office that was sitting, basically 40% vacant. Was a 1985 vintage office that needed a ton of updates and tenant improvements in order to get market rate rents. And so effectively did a sale lease back to us. As we were under contract to purchase the building, we were approached by a local developer who was developing another mixed-use residential facility nearby. And basically they said, hey, we've been looking for a location for a global brand for a business executive hotel in the area, specifically a Courtyard Marriott that we wanted to put in place. This is the location that we wanted. Would you guys consider selling this building to us or JVing with us, on this business executive hotel? And so lo and behold, we're partnering, taking this office building, converting it to a Courtyard Marriott. Should be done in 24 months. We were looking at purchasing it. It was purchased for $7.3 million. We have pro forma target exit within 7 years at $21 million. Now, the interesting thing about this is, we're looking at getting. We've already been granted by the City of Temple and by the Economic Development Corporation in Temple for grant incentive funding for $4 million. Because we use renewable energy and infrastructure in all of our deals, There's going to be solar tax credits, renewable energy infrastructure tax credits, and then also, because this building falls is a little bit older and falls within the historical tax zone, there's going to be historical tax credits as well, right? So, there's just a ton of upside behind this building, and like I said, it's great for us to have the support of the city because they didn't have a ton of overnight stay capability. We was really looking for overnight stay capability for downtown Temple, and we were able to partner with them. And this goes back to the whole public-private partnership opportunities that are surfacing. They effectively approached us about taking this building that was an eyesore in downtown. I think it's the third tallest building in downtown Temple, and turning it into something that could be, an asset to the local economy. And so, yeah, looking forward to completing this deal. And here's another example of adaptive reuse project that should pay tons of dividends for us and our investors. And so I'll wrap up there. From my perspective, just was an absolute pleasure to be able to kind of talk through what we're up to, what we're doing. If you want to learn more about what we're doing around adaptive reuse, feel free to register on our email list with the QR code below. My email address is michael@redeeminvestments.com. If you want to explore any sort of conversations further, have meetings, calls to talk about what we're up to, you can reach out to me directly or to our investor relations team at investors@redeeminvestments.com. And the final ask is, what we're doing is unique. It obviously takes strategic relationships with local municipalities, strategic partners like Regis, to be able to pull off some of the things that we're doing around hybrid flex work environments, and having relationships within healthcare around medical office buildings and various different surgeon groups that are in Texas that will allow us to capitalize on how the office landscape is changing, right? So feel free to reach out. Look forward to touching base with you if you're interested. And at this point, I will turn it back over to Evelyn to kind of wrap us up for today.
There. Thank you, everybody. That was really great, Michael. I think a lot of our investors are kind of in the same boat where, at one point the office space was one of the best investments. And now, like you said, everybody's working from home, including myself. So thank you again. Do we have any questions, Kamea? If not, I'm going to jump right into our slides for today. Alrighty, let's see. So again, if you wanted to take advantage of any of the opportunities that Michael was discussing, we would love to talk to you to maybe welcome you into the Quest family and help you with your financial future. You are able to invest in what Michael was talking about or any other private investment. If you are looking to open up an account with us, Quest, it is a new year, new money, new account. So until the end of the month, we are offering 50% off your account opening fee if you wish to do so. We are also presenting the dynamic duos, power couple partnering for success. Sometimes our clients ask, what do I do if I don't have enough money in my account to make my investment? Well, the dynamic duos is a way of teaching our clients and those wishing to invest how you can partner your account. And these are going to be in-person events in all of our Texas offices: Austin, February 1st, Dallas, February 6th, and Houston, February 8th. If you are in one of those cities, or if you want to come in to those cities, we would love to see you at the event. And as always, we are gearing up for our Quest Expo. All of our team is working very hard in the background, making sure that this event will be a success, not just for our clients, but for also the people who will be presenting. We have some great speakers. We hope to see you there. Check out the QR code so that you can get your tickets. And again, thank you so much to everybody for spending your afternoon with us. I know that our lunch hour is sometimes a little hectic, but we are so happy that you are here. And Michael, I hope that you get some good questions emailed to you. Thank you so much for joining us. It was a pleasure. And with that, we conclude our Power Play Tuesday. Thank you, everybody.